Hi, thanks for joining the third installment of our 2020 WASDE preview series. And today we've got our special guest, Jacquie Holland from Farm Progress. Without further ado, we'll just kind of roll into it. The brief agenda is I'm going to hand it over to Jacquie. She'll give an update on the markets, what's new in ag these days. I'll give you a preview of the WASDE report due out tomorrow. I'll give you a sneak peek of our yield forecast numbers at the national level. And then we'll do a little Q&A with Jacquie, where we'll talk about her, her background, her experience, and just how her career has evolved in ag throughout the years. So yeah, let's get started. So Jacquie, thanks for coming on today. This is fantastic to have you on. You're our special guest, as I mentioned, from Farm Progress. Background as a grain market analyst from Illinois originally, but now living in Colorado. And just before the broadcast, we were talking about how you love the great outdoors. Yeah, and you got quite an impressive background in precision crop technology and food manufacturing, and would just love to kind of get your perspective on what's going on in ag markets these days.
Well, thank you so much, Keith. I really appreciate that. And with that, I'm ready to go.
So let me turn it over to you, I guess. There you go. You should have control of the screen now. Yep.
All right. Can you see everything okay?
Absolutely.
Good deal. Okay, so I just threw up a quick snapshot of the latest commodity prices. These are delayed by about 20 minutes or so. But I just thought it'd be good to show, kind of preview everything that we're talking about, that we're about to be talking about impacts all of these commodity prices. So looks like a pretty good day across the board for grains and oil seeds. And yeah. Okay. So last Tuesday's USDA acreage report had a pretty big surprise for corn acreage. We found that there were actually 5 million fewer acres of corn planted this year. You can see that that amounts to the largest difference in at least 12 years. My data didn't go farther back than that. So what does that mean for production this year? Well, there's going to be about 1 billion fewer bushels produced than we expected on March 31st. So we'll have about 15 billion bushel crop if crop conditions allow. USDA downgraded corn crop conditions 2% this week to 71% good to excellent. If we can keep some of that good to excellent momentum, we could see the largest corn crop in history this year. So what does that mean for ethanol? Or where are all of those bushels of corn going to go? Ethanol has traditionally been the biggest consumer, one of the biggest consumers of US corn in recent years. However, even just looking at April and May of this year, there were 355 million fewer bushels of corn consumed for ethanol than the same time a year ago. That's about 3% of the 2019 crop that just completely disappeared from the demand pipeline and remains in farmers' grain bins, which we saw in last week's quarterly stocks report as well. But ethanol is bouncing back, as you can see from this chart here. Production is up 70% from the darkest days of the pandemic. Ethanol demand for blending is followed suit, up 69%. Gasoline demand is still a little bit off of last year's pace, but there is some good potential for upside as we start to get the world a little bit more healthy. USDA is forecasting an 18% increase in corn exports next year. It's an aggressive target considering that current marketing year corn exports are down 17% from the 5-year average. Moving on to soybeans, in last Tuesday's report, soybean acreage got a 300,000 acre bump up to 83.8 million acres. That's gonna total about 4.1 billion acres if the weather holds. So the current soybean crop is rated at 71% good to excellent as of this last Sunday. Soybean conditions are holding their own much better than corn right now. Excuse me. And as you can see,
Jackie, real quick. I mean, it's we were talking before we jumped on, but you know, it's 98 degrees out by where you're at in Colorado right now. It's 90 degrees here in Chicago, and it's sweltering. What is weather like that? What does that mean for, you know, these conditions that you're talking about right now?
So, especially as the crop nears pollination, it could stress the crops a lot more, and it could reduce some of these yield estimates that we've seen out there. And you're going to get a little bit deeper into that here in a couple minutes. So I won't take too much of that surprise from you. So the next week's forecast from NOAA is looking very toasty, as you can see here. But the good news is there's higher chances of rain across the Midwestern growing region the following week. So if we can keep these crop conditions in good shape, what are we going to do with all of these soybeans? Well, U.S. soybean demand is forecasted to set a record high in the 2020-2021 marketing year coming up here on strong domestic crush demand. And this is a really good thing because year-to-date soybean exports are nearly 20% lower than the 5-year average, as you can see here. Historically, volumes pick up in the last 7 weeks of the marketing year, which we are just around the corner from this week. Moving on to wheat, winter wheat harvest is over 56% complete as of Sunday. So far, yields are looking higher than last year, despite all of the dry growing weather in the Southern Plains and rains in the Midwest. We have been seeing some lower protein tests out of the Southern Plains, which could create some good premium opportunities for farmers down the road this marketing year. Spring wheat conditions also got bumped up 1% to 70% good to excellent this week, so that was a really good sign for growers in the northern U.S. Just over 44 million acres, 2020 wheat production, our wheat acreage continues to put in historical acreage lows amid strong global competition, which we can see in this export graph. Old crop wheat exports were pretty anemic. The marketing year ended in May. The exports came in 5% lower than the latest May USDA forecast. I think we'll see a revision in tomorrow's WASDE report, but I'll let Keith dig deeper into that. But so far this year, in the first about 5 weeks of the new wheat marketing year, exports are about 8% higher than the 5-year average. So that's a really good sign for international wheat demand. What's keeping U.S. wheat demand from being a bigger player on international markets? Just production, record production in Russia and the European, as you can see in this graph here. However, Russia, France, and Argentina have all come out this week and reported reduced yield and acreage forecasts for the 2020 growing season. So that could give US wheat farmers a good boost this year. And that's
Cool.
That's all I've got.
That's fantastic stuff. I got a little bit more that I'll walk everybody through, and you know, definitely keen on digging into this a little bit more when we get to the Q&A section. So I'm going to take control here. All right. So my screen should be up. Just going to take everybody through an update on our yield forecast. We just released a new report on this Tuesday, and you know, it came in largely unchanged. But quickly, I'll review USDA. Right, so USDA from the June WASDE report are due to be updated in tomorrow's release. They were previously 178.5 bushels per acre for corn, which is unchanged from May, and 49.8 bushels per acre for beans, which was also unchanged from May. You know, conditions have been pretty good, and certainly our estimates have gone up since they were originally reported in June. So, you know, as of Tuesday, July 7th, we were up to 174.6 bushels per acre, which was up from 172.4 bushels per acre in our June release. And beans were largely in line. At one decimal place of precision, it shows there was no change, but there was a slight tick up. So conditions have been good. If anything, you know, it's possible that USDA might revise slightly higher, but it's, you know, certain things are certainly trending that way. So wouldn't expect a downward revision by any means, but nothing, you know, through the roof based on the expectations that we have. Since Tuesday, and this is kind of exclusive to the live stream and our Commodity View Pro subscribers or our data customers, but we've actually changed our forecasts a bit since then. So corn has been revised down 0.8 bushels over the last couple of days, while beans have remained fairly constant. So you know, our estimates, our forecasts change every day. That's based on, you know, new information we're getting from satellite imagery. It's based on new field level information that we're getting for soil moisture and things like that. So those things tick on a daily basis. So, you know, they're due to change any given day, and they reflect all current conditions that are kind of out there in the field. So at the state level, and this is a recap of our the numbers that we put out on the 7th on Tuesday. You can see there's a little bit of variation. So, you know, right here you've got the corn forecast, which is the 173.8 that you saw earlier. You know, it does vary quite a bit by state. So if you look at Iowa, 194.4, great number. It's up from the June 16th report. However, Illinois, right, 182, which was actually down, you know, 10 bushels per acre from our June report. So as you can see, even if the national trend is fairly steady, and we're looking at corn there can be quite some variation in the different states. And further to that, if you dig into, you know, specific crop reporting districts or counties, you know, there can be substantial variance. So something to consider. The headline numbers that you're getting from USDA don't necessarily tell the whole story for individual smaller, you know, crop growing areas. So Illinois was really a standout there in terms of a decline. We also saw Indiana and Kansas show a pretty meaningful decline in expected yield at the end of the season for those states. Certainly, you know, more states are being revised down than they're being revised up. So take that for what it's worth. You know, the national forecast that we produce, that's weighted by the amount of production at all the given states. So, you know, even though you might see Ohio down here with, you know, that's down, let's call it 2.57 bushels, that's going to have a not necessarily like an outsized impact to our national forecast, which, you know, is primarily made up of the major or the biggest corn producing states out there. So that was corn. On the bean side, a little less volatile, right? So you see here 48.8, not much change on any of the individual states. Iowa and Illinois were down a bit, but those are boosted. The overall national number was boosted by a slight increase in Nebraska. So a little bit more mixed here, whereas, we did see some underperformance for the given states in corn. So just a reminder that you can get all that state level information for free. We publish our yield forecast report 2 times a month. So it's on the first and the third Tuesday every month. So this last Tuesday was the first report, and we'll see another one on the 21st in about a week and a half. So go to our website. I've got a link down there at the bottom. Sign up. It's completely free, and we're going to be adding more to that in the future. We're working on adding our production forecasts, which obviously includes acres planted. So that's all that's all coming up. Hopefully before the end of the growing season. But yeah, definitely check it out. And like I said, it covers both national and state level indexes. Just a quick recap in terms of how you can get access to lower granularity data. Commodity View Pro, any of our subscribers have access to daily numbers through that platform, and you can view that in maps, geospatially. You can view that in our cash prices table, which kind of gives you a nice little overview of what's going on in a given state, CRD, or county. So not only can you view it on a daily basis in there, and they do indeed update every day, but you can view higher granularity, so county level information. So what's important for your growing area. So that's all I had in terms of the forecasts. So what we're going to do now is just kind of go through a little Q&A with our esteemed guest today, Jackie. And yeah, so let's just get started. So Jackie, we'd love to hear a little bit more. I know you're in Colorado. We brought that up earlier. Just would be great to hear a little bit more about your background, how you got into the business, how you ended up in Colorado, and why you moved out of Illinois or the Midwest.
All right. Well, I grew up on a dairy farm in northwestern Illinois and spent my whole life and a good chunk of my adult life feeding calves, milking cows, raking hay, doing field work, the whole 9 yards. But I've always been, and just through that, I've always been passionate about helping farmers. I also was good at math, and I love working with data. So I kind of veered off the farm and eventually went to Purdue for my master's degree in ag econ, and came out to Colorado to do a little bit more graduate work, but ended up going into food manufacturing and spent several years as a financial and operational analyst out here in Colorado.
So what does that mean to be a financial and operational analyst in food manufacturing?
So I spent a lot of time in different plants, looking at different performance metrics, and then translating those into financial metrics. So a lot of budget analysis, a lot of managerial accounting, and just really learning how to work with data in a manufacturing capacity, and be able to translate operations into dollars.
Interesting. Was there a particular food that you work with? I have friends that work at Pepsi, and maybe they work on Gatorade, or they work on Frito-Lay or what have you. Was there something specific that you focused on, or was it a little bit of everything?
Focused on poultry production and mozzarella cheese production. Cheese production for pizza specifically. So.
Okay. Now, how does that differ from the mozzarella I might get if I want to make a caprese salad?
Not quite as good a quality as that mozzarella.
Yeah.
It's a little bit different fat content, a little bit different manufacturing process. there's different cheese recipes for how you want a cheese to melt, and there's a lot of chemistry that goes into those different kinds of recipes.
Okay, so it's pretty complex, right? It's nothing's easy,
Yeah.
right? I guess any industry, the you can go super deep and learn anything about it, right? And I'm sure food is you know, full of little pockets that you can really dig into and figure out, you know, all there is to know about it, right?
Oh, definitely. But that's what I think I really love the most about agriculture. There are so many of these different little pockets, and they have such big impacts to farmers, to factory workers, truck drivers, and I mean, at the end of the day, consumers who eat it. So I'm really, really proud to be a part of that.
That's really cool. So, you know, working on, you know, cheese production, all of that, and then tell me a little bit about like the shift or the turning point where, you know, you sort of getting more into grain and things like that.
Well, as I said before, I've always been passionate about working with farmers. You know, growing up in a farm community, working with ag bankers, agronomists, input dealers, I really missed that. And when I moved out to Colorado, my mom will say accidentally, but I met my fiance, and he's from out here and he's based here. So I had been wanting to get back into the production scene for quite a while, and this opportunity presented itself about 6 months ago, and I jumped on it. So
Yeah, that's really cool. And you know, we were talking before the live stream started, but it'd be great to hear a little bit more about the content that you're producing each day, where people can find it, you know, what you're kind of covering on a day-to-day basis.
sure. So I write the daily morning report for Farm Futures and the whole cadre of Farm Progress publications. And basically every morning by 7:30 a.m. Central Time, I have an outlook out for farmers, end users, traders, anyone who's interested in the commodity space. And it just gives a forecast of what is going to go on in the markets that day, what happened in overseas markets overnight,
Okay.
as well as any relevant marketing news that could impact a grower's marketing plan. And then I also do a couple other reports throughout the week. Right now, I am leading up Farm Futures Feedback in the Field series, where we survey our readers and just ask them how their crops are looking. And we share that information with other growers so everyone can get an idea of what's going on in agriculture in different parts of the country.
That's really cool. In terms of like the feedback that you're getting from your farmers, is it pretty uniform? Like, are they all saying the same thing, or are you hearing different stuff all over the place?
A lot of people need rain, which is not a surprise. But we have seen some little pockets of some more pockets of optimism, I would say, in certain areas than other areas. Central Illinois is starting to look pretty dry. They're really starting to feel the pain. So their outlooks haven't been quite as rosy as our reports from growers in the Dakotas. So it's quite a contrast.
Yeah, and I guess, well, it's unfortunate to hear that, but you know, at least that aligns with the yield forecast, because as I was showing, the corn yield for Illinois is seeing a market decline relative to some of the other areas, right? So
Right.
I guess that echoes what you're hearing from the fields. That's really cool. So you know, you got to get a report out every morning at 7:30. That you must get up pretty early in the morning then to well, I guess not that early for the growing community, but early for me at least. What time do you get started writing this stuff? It's, you know.
So I'm in Colorado. I'm on Mountain Time. I'm up between about 4 and 4:30 every morning,
Okay.
which is fine. I keep telling people as long as I'm not up that early to milk cows, I can do anything at 4:30.
Yeah. Yeah, that's yeah, you got to do it every day. It's nice to have a routine, and hopefully after you get your report out in the morning, you can go and enjoy the fresh Rocky Mountain air.
Yes. Yep. I can usually get a run in after I get reports sent out, so it works well.
So you do triathlons, is that right?
Yes, I do. Well, I did up until this year, but yes, I really enjoy endurance sports, and just the Colorado community is amazing for those kinds of things. There's a ton of races, a ton of training events, and I've made a lot of good friends by running and biking and swimming. So been a really fantastic experience for me.
So triathletes, right? Everybody's kind of got a specialty, right? Maybe you're a runner who bikes, but maybe you're not as good at swimming. Like what's your strongest event? What's your weakest? And how does it align with kind of how you grew up in your background?
So I grew up running, and
Okay.
running probably is naturally my best event. Was not a good swimmer growing up, and have really put a lot of time and effort into improving my swimming skills. And really, I probably enjoy swimming the most of all three events now. I'm a horrible biker. I'm very slow. I can never get the power I need. I just suffer through that part of the race.
Okay. Okay. Yeah, I grew up a runner myself, distance runner all through high school and middle school and a bit in college. And I always thought I was a good swimmer or like at least a decent one. But my wife and her whole family, they're swimmers by trade. And like her brother's at University of Michigan, they're like a top three swim program. He swims there, and I thought I could swim. And if I go in the pool, they look at me like I'm completely incapable of like they basically want to put a life vest on me if they see me in a pool. But I've been swimming since I was like, a little tiny kid. I always thought I was okay, but not compared to them. So
I have a couple friends who are kind of from the same vein, and I don't compete with them at all.
yeah,
I don't even try.
yeah.
I get
So
to know them, but I don't swim with them.
yeah. So I mean, more power to you for doing the triathlons. I never kind of had the guts to get out there and get in the open water and do a big swim. But that's a testament. That's incredible. Have you ever done like a super long distance one, like a super tri or super marathon, anything like that?
Not yet. Not yet. It is on my doing a half Ironman is on my bucket list though.
Oh wow.
So I'm hoping. I've been kind of staying in a fairly regular training routine, and I'm really hoping once it's safe to go back to the pools and organize races again, that I'll be able to kind of capitalize on it.
That's cool. So turning back a little bit more back into ag, what are you hearing from people? Like what's kind of like what's one big prediction you've got for grain markets the rest of the year?
I've been seeing a lot of stock market forecasts that say that the economic recovery from the pandemic is going to be a pretty big stop and go uh, consistency, an inconsistent inconsistency for the foreseeable future. Um, the big thing I see is that kind of trickling over into the grains.
Okay.
And that's just kind of my biggest concern. I'm a little bit more risk averse, so just the economic volatility is just really concerning for me in the grain space.
Yeah. Well, I will say I've been eating a lot more pasta since the pandemic started, so hopefully that helps the wheat market. I can't be alone in saying that. I feel like it's flying off the shelves, or at least it was back in the day.
Have you been making any sourdough?
No, no, we haven't. Have you?
No, we haven't, but I have been trying to perfect the my chocolate chip cookie recipes. So
Okay.
I'm doing my and drinking plenty of wheat beer. So doing my part to keep the U.S. wheat industry alive.
Yeah, doing your part. Yeah, I can't get past the like the what is it, the culture or whatever you have to keep in your house to support sourdough, right? Having this like living, breathing thing, it's kind of weirds me out. So I don't see that happening.
Yeah, stick with cookies. Go with cookies. It's a much better alternative.
Yeah, yeah, fair enough. Um, so that's all I kind of had today, and I don't see any audience questions. So Jackie, before we jump, is there anything else you want to go through? Anything else you want to talk about on the markets?
Nope, I don't think so.
Well, thanks for coming on today. It was fantastic, kind of chatting with you, hearing your perspective on what's going on. We'll see what comes on the WASDE report tomorrow, and hopefully everybody takes a look at the numbers we produce, and that can help guide you in terms of what your expectations are. But I just want to say thank you so much, Jackie, for coming on. It was great talking with you. Great to hear a little bit more about your background and look forward to getting all of following your reports and your daily commentary online.
Thank you so much, Keith. I really appreciate it.
Yeah, for sure. And then if anybody wants to find your content or like subscribe to an email list or anything like that, how do they do that?
Yes, if you go to farmfutures.com, my morning report is usually in the middle of the screen, and there are directions on there on how to sign up for it and receive it every morning.
All right. So I know that's gonna be the first thing I do once I get off of this. So I look forward to catching it in my inbox every morning, and I suggest everybody else subscribe as well. So once again, thank you, Jackie, for joining, and thanks everybody for jumping on today and checking out our live stream. And definitely stay tuned for next month's report. So thank you all, and have a great day.
Thanks, Keith.